FTDs they have because they're ETF FTDs, but it's possible some are covered. We'll see how the dark pool dumps look in the next couple hours. Are you gonna sell CCs at the top with the split around the corner? I might sell some. Is there an easy way to understand why Jimmy runs at the SPY, but when the SPY tanks, Jimmy just stabilizes? If not, continues running. How? I think this is due to the effects of like illiquidity and too much internalization. Which they did offload some of yesterday. Illiquidity, internalizers, and actually FTDs as well, right? So, due to our illiquidity, we're very sensitive to active fund pressure. So when active funds buy or sell, even if it's nominal amounts of shares, as you can see by our low volume, the effect of this is very strong on GameStop, right? Like it would be on a levered ETF. So, we see this buy pressure come in, and that has a really strong effect on our upside. And then when the sell pressure from these active funds comes in, well, they've internalized so much of the buy pressure that they need to kind of get rid of some of that internalization. So when they realize some of this sell pressure, they marry those orders. And so what you'll see is when the SPY drops, you'll see GME come up with the SPY and we trade up, right? And then the SPY will drop and GME will just do nothing, right? You'll see no volume come in for like 50, 60 seconds while the SPY's just dropping like a rock. And what this is, like obviously active funds are selling, but they've internalized orders. And so we just don't go down, right? Because what they're doing is they're taking that sell pressure and they're using it to satisfy the orders that they've already internalized. So our order book just freezes up essentially while they do this. And then, once they've dumped some internalization, if the SPY continues down, we'll see like a little downside. But then the next uptick in the SPY can launch us back up because we're so volatile to the upside. And then FTDs just kind of increase that sensitivity. And, net short FTDs create buy pressure because they need volume to clear them through CNS, which requires buying at the market. So on days where we have both illiquidity and active funds and FTDs working in our favor, we can climb up quite a bit, even if the volume is kind of low. So I hope that makes all of it more understandable. I know it's complex and a lot of shit, but is what it is, I guess. I can just feel the Persian rug pull in my jewels. Price action screams June. Yeah, going up on low volume is not overly bullish. They're loading up on more August 200 puts. I saw, but I feel like some of them are sold. It's possible the MM doesn't want risk going into next week. Yes. How does leverage ETF maintain perfect leverage if they trade options? Shouldn't theta decay and eat into intended leverage over time? Yes, that's why leveraged ETFs have decay. All leveraged ETFs have decay. I mean, here, look at like. That's why they say they're not meant to be held for long periods of time. Like if you look at UVXY on like the weekly, see how it constantly decays. and then they reverse split and then decay and reverse split and decay. This is how levered ETFs always work over time. So we're pretty safe to say we won't see a negative hedge on GME prior to OPEX since so close. I mean, we'd have to fall below the gamma neutral here at 127. And right now, I mean, we're not falling below 127. Not especially not with this current price action. Is this comparable to what happened to Tesla between their announcement and their split? No, Tesla was fucking ripping. There was no question about what Tesla was doing pre-split. Tesla went from like fuck, it was ridiculous. It was 1 second. I think I charted some of this earlier this week. Tesla went up 123%. Oh wait, nope, sorry. That's the wrong one. 1 second. That's the post-split run. So the pre-split run on Tesla, I think from announcement to the split, Tesla went up 158%. So it 3x'd. And then it went up another 100% in like November OPEX. So, and this is kind of what I was talking about the other day. And obviously, GameStop's not Tesla. We may not see the same effect, right? But, you know, if we continue to see, and it climbed on very high volume into its split. But, you know, there was this big sell-off post-split, right? And then we see FTDs come due in the ETF time frame right here. And then we have a few down days, and then November OPEX just took off like a fucking rocket, and it ran all the way into January. How profitable do you expect your Jan 2023 950s to be on an OPEX run? Depending on the strength of the run, at their peak pricing, they can hit like 3 to 5x. Here, I can pull up the chart. So if we go out here to like let's go to the 1 hour and look at the March run. So in the March run, you know, they went from a low of like 199 to a high of like 1340 at their peak. Right now they're about 250, so a little elevated already compared to where they were back then. I mean, at the low there, Ivy hit like 80%, I think, after earnings. So they're a little pricier now, but still very cheap. So if these like, you know, 3 or 4x, they'll be worth roughly the same amount. I mean, there's theta decay here too, so you know, maybe like they could peak at like 9. But if we have a stronger run than March, which doesn't look probable right now, but if we were to, then it could hit much higher. I think in November or August they hit, you know, August they went from 15 to 40. In November, well, from end of October when Ivy was at its low, I think they topped out. They went from like $13 to $34. So it's always about roughly the same. But you see when price drops, the price of these contracts doesn't drop that much, right? Like they're not very affected by delta. They're more affected by the decrease in IV.